All right, traders, welcome to today's recap. This is Christian from Tribeca Trade Group, and it is Monday, November 4th. So we'll go through all of today's moves and I'll give you a kind of my quick explanation that really, some of the things that I'm noticing that's going on right now in the market, and can kind of give you a little bit of an explanation about why some things are really moving, why things are not. But everything that we're going through tonight is for information purposes only, not going over, not giving out any advice or recommendations. And also, I'll say this at the end of the video too, but if you're a new member, we've had a few new members join us recently. Also, if you're thinking about joining, great time to join right now. Wednesday after market close, what we'll be doing is just kind of going through just overall what I'm doing on a day-to-day basis, how I'm kind of coming up with my ideas, where I think we're going, and so forth. How I'm using option flow, how I use ETF volume, right? Because I think that's really helped me pick up on the trends in international more than option flow. Option flow gave us some ideas about emerging markets and EEM and FXI, but really didn't show us too much in terms of international developed, and those things have been on fire. So really having both of those kind of helps me formulate a nice view on where the money is moving into and out of. So again, that'll be Wednesday after the market close. We'll do that, and we're going to open up like Q&A for members to kind of go over anything and everything, especially if you're new and you've just joined. That'll be really good. And of course, we'll go over chart forum, which I like to do every 2 weeks, where we kind of just you bring your charts in, we go through them. I have mine that I want to go through as well. So I think that'll be a really good time to do that. So let's talk about today's movers. Of course, there's still a lot of earnings that are coming out. Looks like Adobe came out with they pre-released. It's funny because this was on the member watch list. I don't have a position in it, but son of a gun, up to 291, and you get the benefit here too if you're in some type of option play or in some type of calls. You're really going to get a nice bang for your buck because there's no jump in implied move, right? Normally when you have an earnings trade, the options get super pricey because they are pricing in a larger than normal move, but I don't think there was. So if you're in Adobe, congratulations. This was one of the stocks that we had in the watch list, the member watch list that I give you. Adobe was, of course, this is alphabetically ranked, but Adobe was one of the ones that I was looking at. Again, I didn't put this thing on. I feel stupid about it, but it is what it is. It's tough. Like I said, the watch list that I put out for members on the weekend, it's a starting point. It's a group of names that I think are setting up technically. Do I want to buy every single one of those names? Because I think I put out a list of about 20 names. No, but they're good to, they're showing technical relative strength, or there's a signal that I'm seeing in those names. So anyway, that's Adobe. A few other names that reported. I think NBIX had some mixed results. Shack is down. So let me go over I'm on the wrong. Yeah, Shack. So where I would be a buyer of Shack, it's getting pretty close. If I just let this fill in here for a minute as I'm talking, but there's a VPOC down here at 69. So the Shack numbers were not bad. I put the headlines in here just a minute ago, but the numbers were not bad for Shack. I think people were focused on the comp sales were a little bit light. Also, the revenue was a little bit lighter than expected. Comp sales about 1.5, so about 2. But their guidance seems to be okay. So the guidance 592 versus 597. So that's a little bit of an up in the full year revenue. So I would be a buyer of this. But again, I use the market webs as an indicator of buying and selling pressure and where I would buy. So you have one down here at 68.79. So I've got an order out at 69, and then you've got a whole bunch down here on the 5-minute, which this scares me a little bit. But I don't, we don't know when these will come into play. I'll just let Thinkorswim think for a minute. but you'll see them show up. It just takes a little bit of, there we go, starting to fill in there. But there's also a few. There's one at 69, there's one at 67, 65. So, I would probably put my first buy order at 69 and then kind of scale in a little bit further if we go lower. So that's how that tells me, and that's how I use a lot of aftermarket trading, is to look where there was buying and selling pressure. And I don't know if Thinkorswim will let me go back that far. You can see a whole bunch back there. So where is that coming from? All the way back here. So again, we don't always have to take all these out, but I think 69 would be a good place to buy, because that's showing up on multiple time frames. All right, let's talk a little bit about the market. So a couple of the observations, right? And this will kind of, so first of all, what do we know, right? We're breaking out, number one, right? So we're in this nice upswing. It's getting somewhat mature. Why do I say mature? Because I look at the RSI and the indices. Normally when they get above 70, that's when it's gotten to be a pretty mature swing. So we're close. We're at a 66 right now, and I think if you pair this up with IWM, which is a 68 RSI, same thing for the Qs. It's getting close to being pretty mature, this swing up. So, what did I do today? Basically took targets, took profits. And the thing about this is, right, I don't know. I don't have a crystal ball. We could get more overbought. We could continue to go up further. And I think that's kind of the pain trade, is because it forces funds to buy higher. In a perfect world, I would like us to kind of check back a little bit, and I think that's what a lot of people want, right? A lot of people that have been kind of left out of the rally, they want some type of a check back, but it doesn't always happen that way. So, you kind of have to balance your risk with, being able to participate. How are you going to participate if this market continues to grind higher? Because again, nobody knows if we're going to check back, or, I'm talking about overbought levels, but like I said, we could certainly get more overbought. So I'm going to talk about rotations in a second, but there were some great questions that we had in the trading room at the end of the day. Some people thinking about buying a little bit of puts at in the afternoon. And my response was, well, why are you thinking about buying puts in the S&P? Is it just because we're up? Is that why you're buying puts? And you think because we're up a few days that we're going to come in? I mean, these are all things that you should be thinking about whenever you get into a trade. I think we're so conditioned sometimes, and I think sometimes like newer traders like, oh, geez, we shouldn't be up this much. I'm buying puts. I've learned to kind of try to ride these swings for as long as they happen. So I don't necessarily buy puts up here, even though I think we're extended, because one of the things that we could do is A, we could grind higher, B, we could sell off some, or B, we could just kind of hang out a little bit and digest some of the gains. But I don't really have a signal that's telling me to sell. So just because it's the same thing when something goes down. Sometimes traders, and I think beginner traders, just when they see something down, they want to buy. Well, what's the reason why it's down? Is it, is there a level that you think is support? Do you think the market is misinterpreting, or, so there's some things, just like I was talking about in the weekend member video. Sometimes when we dip, right? Everybody wants to buy sometimes that first day when we dip, and sometimes it's a 3-day dip, right? So same thing, like if you're buying puts today just because the market is up, if we go higher tomorrow, those puts are going to be underwater, right? So I would really be looking for some type of signal. If not, one of the things I think that's hardest to do is just to sit on your hands and don't do any, don't overtrade. You don't have to put on a trade every second. But yeah, I don't have a sell signal, so I'm not buying puts. If I wasn't taking targets in my trades, like I've taken off a lot of short-term option plays, if I wasn't doing that, then maybe I would say, okay, I need a little bit of SPY puts as a hedge in case we do. But what I'm doing is, you could see, target here, EM was in real, so I took this EM trade off that I had on, 80 cents, paid 29. Shaq, I was looking for a move into earnings, not a move on earnings day, so I took this trade off this morning. FCG, which was our nice play on energy, took that trade off. Nike, this trade ended up working slightly. Berkshire. So again, the first 2 hours of the day, just taking risk off. Again, and I don't want to take off every single trade, but something that expires this week or next week or in 2 weeks in options, these are gifts right now. So, ON, I got targets in this one. Ali got targets. This is a big. The last couple of days I've been taking off risk into the swing, not necessarily putting on puts. Now, again, I don't know what's going to happen tomorrow, and you have to kind of judge that based on risk to reward. Do you think we're most likely going to be? What do you think the probability in your mind is that we continue, like we're up 0.5% going into the open tomorrow, or we're down 0.5%? Also, what do you think would happen if we end up coming into the open tomorrow down 0.5%? Do you think buyers will start to come out and say, "Hey, I missed this last rally. I'm going to go in, and this is a place for me to buy"? That's kind of what I think. So I like moving a little bit more into cash, taking my short-term option positions off, and then if we happen to be down 0.5% on some silly headline, then I want to probably be looking at to see if people are going to be buying that dip, right? We saw that on Thursday, right? We kind of had to wait to the whole day to confirm that it was a 1 day dip. But at the end of the day, like the last hour on Thursday, we started to see the VIX give back the gains. We saw TLT give back the gains. We saw buyers starting to come back in and buy that dip. So again, that was good confirmation. So again, just all things to kind of think about in trading. We'll be going over more of this on Wednesday, so I'll move on from that topic. But just think things out. I would say when you're trading, don't just react. Oh, the market's up, I want to buy puts. And it's vice versa when the market's down. Oh, the market's down, I'm buying. I'm buying the dip. Think for things. Try to see if you could spot things that are changing, not just reacting to, you think it's up too much or you think it's down too much, right? Try to find when the turn is going to happen, and wait for that confirmation. So anyway, that's my opinion. That's a little bit of how I trade. So what are some observations that we're seeing today? So this, of course, is my spreadsheet where I look at in the AA column, you've got the percentage day change for the day. So again, that's most important. But what I also like to look at is what's happening from the open. So number one, we are seeing, and this is always the case, right? This has been the case now for 15 years. Overnight moves are greater than intraday moves for the most part. Not every single day. Overnight moves are greater than intraday moves, right? So you have to. Why does that keep putting a question mark? There we go. Overnight moves are bigger than intraday moves. So again, if you look at the S&P on the 5-minute, right? Here's where we opened, here's where we closed, right? And we're moving this whole thing. And what I've been noticing too, which we talked about in the weekend video, is that really going into the open, like in the 2 hours leading up to the open, we're seeing this ramp go into the open. And then the open happens and sellers, just like I'm selling positions, I think a lot of people are taking a little bit of things off the table into that strength. But if you're sitting and waiting for like, okay, I'm going to do day trading versus like where all the gains are happening, which is the overnight markets, you're going to be a little bit frustrated unless you could really find the moves that are happening in the rotations that we're seeing. So that's number one, and I think that's important, is that the overnight moves, like you could have, if you're trading a little bit part-time, you could basically just position yourself at the end of the day and then take your positions off in the beginning and right around the open, and then come back for the close. That's where there's the most right now. What's been taking place is that's where the most alpha is. By doing that, taking your positions off in the morning and then reassessing at the close to see if you want to put any new money to work. So I think some new money is being put to work, but overall there's rotation going on left and right. So part of this is because, so I will give you my theory on this. We're about 15 minutes into the video, and you could see the names that outperformed today. Definitely energy, Chinese internet names, but a lot of these things, besides the move, what's going on right now in oil and gas, but a lot of what's happening is every time they get closer where they're revealing things, and I know they're headlines, but as it seems like they're getting closer to a trade deal, what happens is it's like a percentage, right? Oh, well, there's higher probability that they're going to get a trade deal done. Maybe it's just 5 or 10%. There's a mad scramble for under-owned value plays. Things like transport, things that have been super trade sensitive, transports, Chinese internets. You better believe that those are going up on those. Banks. And then there's a counter move too. The counter move is that, well, okay, all this money that's been put in bonds, it's coming out. When bonds sell off, rates go higher, and it makes the banks more attractive, right? So that's the kind of the counter move that's also going on. Hence, rates are going higher. I don't want to be in home builders anymore. And home builders sold off 2% today. They actually started the day with everything else up 0.5% and sold off 2.5%. Right? Also, names like PG, which has been a huge hiding place, was down 3.8% today as funds start to leave safety plays and go into a little bit more higher beta areas of the market. So, USMV, this has been $13 billion of inflows this year. Well, this is one area that you could possibly think about shorting if it breaks. Today, underneath the 50-day moving average, right? But this is the way your mind should be thinking. I think anyway, or my mind is thinking, is that all these places that have been utilities, right? Gold miners, staples, REITs, all of these places that are less trade sensitive are starting to see the rotation out of and into some under-owned places. Now, growth is kind of like left out of that on days, right, when we're getting the positive headlines, right? And sometimes it's just a one-day thing. So, I got the question at the end of the day, okay, well, so you think value is now going to be it? Well, I think value responds when you have trade headlines, which we got overnight. So that's today. I I would say they could continue to move up, but I think the majority, if it's a snap move, as soon as you start to hear trade headlines that happen over the weekend, and that positives are going to come from there, all of a sudden, boom, money just starts to rush out of those defensives and into value. But that's basically, you could see we've had this happen, and usually, again, I don't want to say it's one day, but it seems like it just happens in one quick swoop. And then, those areas where, again, this is small cap value versus gross, where it's most pronounced. You can certainly see that with VTV and VUG. But it's a little bit of, I'm generalizing a little bit because it's not every growth name, but certainly, IGV just isn't going to, which was down 20 basis points. Software names, they've been a hiding place, right? So you kind of have to balance that. So tomorrow, so as I was saying, right, with this market, it could churn for a little while because what value might rest for a couple days and growth might pick up, right? Because what happens is when you rotate out of strong names like a Lulu or a CMG, they become more attractive, and that entices buyers to come in. So it kind of goes around and around and around, and that's what's called like a rolling bull market. So again, another reason why I don't necessarily want to buy puts in the S&P is because there could be a significant amount of rotation, and the overall index doesn't move. All right, so that's a little bit of just went on today. So again, these names will become more and more attractive the further they go down, and it should entice buyers. So what else? So international, right? I've talked about for a while that there's been that international developed, like Europe and Japan, have been very strong. Also, I think now emerging markets, right? We've seen for a while call buying in EEM and FXI for the last couple of weeks. Well, now we're going to start to see it. I really haven't seen a migration in the cash So now I think we're starting to see that. You could see some of the volume. And these are like second tier emerging market ETFs, probably some of them you haven't heard of before. CWI, this is actually all international ex-US, but PXH, right, trading 8 times normal volume today. That's an emerging market ETF. FNDE, fundamental emerging markets. What else? There should be a couple other ones in here too. I think even EEM traded about, at one point it was trading 1.6 times its volume, but that may have cooled down a little bit. Let's go high to low in overall volume. Yeah, EM traded the most volume of any ETF today, 1.2 times. So it cooled off from where it was earlier today. But if you're chasing here, like I sold in the beginning of the day, you kind of have to be strategic and wait for the momentum to kind of calm down a little bit. Because if you bought on the open, right, EM actually went down all day today. Keep in mind, for most of EEM, the locals are closed, right? But instead of buying on the open, you could have actually got a better price at the close, right? So you still have to be strategic about what you think is going to happen for the next couple months. Now, these things got a big bump up, and that's why I took off short-term calls, but I was going to possibly roll into a longer data position. I might be upset at myself tomorrow because I did not do that. Again, I think part of this is being patient. We're not going to get every day where we're up. So I think, being a little bit of patient. It looks like there was some profit taking here at the end of the day. So I'm happy to kind of wait a little bit. I would like to have something on, which I don't right now in this group. But that's it. So other things that we traded today, I did add one new position, STNG, and I did add a short. Not in this position. This is a long, but I also rebalanced the portfolio. So HON was a new position we put in the tactical portfolio. Look at this thing. I put this thing on right in here. Also took some profits in Bristol Myers, which has been a real nice position. And what else? I took some of this value ETF that I have. Look at this thing breaking out the 52-week highs. So I took some of this off the table too and just rebalanced into a couple of new names. All right, guys. So that's it. Again, if you're not a member and you like this analysis that we're doing, again, sorry, I'm giving myself a pat on the back here, but we continue to kind of be in front of the curve in terms of finding these moves and rotations and so forth. That's why you don't hear me talk about a whole bunch of growth names, because I've really been positioning. CSX is a new name that we added today in the tactical portfolio because I think this could be a catch-up play. And I traded this in options too. I took the options off for profits today, and I'm just in a cash position. But we're consistently, ahead of the curve, finding different pockets of the market that are showing some momentum. So again, we don't stay in the same positions that some of which are not moving, like the FANG stocks, right? We'll continue to find where the market is trending towards. All right, guys, have a great night. See you tomorrow.